here are the steps you really need. Step number one, you need to understand what an IRS payment plan really is. See, the whole thing is that once the IRS approves you for a payment plan, they really expect you to honor your end of the bargain. So they have strict conditions that you have to apply, you have to follow. So what is it? An IRS payment plan is an agreement that you make directly with the agency to pay your federal tax bill over a certain amount of time. This could be 6 months, 12 months, 2 years, 3 years, 5 years. It really depends on how much you owe and your current financial situation. Now, there are two kinds of IRS payment plans. So you have the short term and the long term. So short term, we're speaking about less than 1 year, and maybe in some cases they'll go like 18 months. They go to 18 months or 2 years. And then you have the long term. Long term, we're speaking about, listen, more than 2 years. Okay, you have 5 years or 10 years. The thing here is that, again, as I said earlier, if you owe a lot of cash, let's say you owe 100 grand, you have multiple back taxes, then obviously the term will be longer. So typically, if you have an IRS payment plan in file, you will make monthly payments to settle what you owe. And again, it's very important. The IRS wants to get paid. So if they tell you, we want you to pay on the 5th of the month, it has to be the 5th of the month. No if and buts. It's not about, hey, listen, yeah, I'll pay you guys on the 7th or the 8th or the 10th. No, this has nothing to do with, you don't have flexibility. This is not a credit card issuer or a lender that you can just razzle dazzle. If the IRS approves you for a certain date, stick to that date. And so long as you're keeping up with that agreement in terms of the amount and the date, the IRS usually will not garnish your wages or seize any bank account or property. Okay, so getting on an IRS payment plan doesn't get you out of interest and penalties for late payments. Those continue to accrue until your balance is zero. So simply because you actually have reached an agreement with the agency doesn't mean that they are not collecting any interest or penalties. I mean, listen, you're not in the quote unquote in the proper situation to start with. So simply because you have because you are late or you have not filed taxes at all or you have not paid your taxes at all, so they'll continue to charge you interest, that's for sure. But at least you have started a conversation with the agency, so they're not actually going to pursue your personal assets, including your bank accounts or property. Step number two, you need to understand who is eligible for an IRS payment plan. By the way, welcome back to the show. Just tuning into this conversation, we're having a discussion about how to get approved for an IRS payment plan. So this is for individuals. Let's say you owe a lot of cash and you can't pay. You need to reach an agreement with the agency. Now, you don't need to call the IRS to get on a payment plan. You can apply online for a short or long-term payment plan if you meet the following criteria. So for the long-term payment plan, you owe $50,000 or less in combined tax, penalties, and interest, and you have filed all of your tax returns. For the short-term payment plan, you owe less than $100,000 in combined tax, penalties, and interest. Okay, so now, do you actually qualify? How do you actually determine that? Your specific tax situation will determine which payment options are available to you. Payment options include full payment, a short-term payment plan paying in 6 months or less, or a long-term payment plan installment agreement paying monthly. So this is really important. Now, you may qualify to apply online if long-term payment plan installment agreement, let's say you owe $50,000 or less in combined tax, penalties, or interest. And again, you must have filed all the required returns. And so, but if you have not filed any return at all, then you go on a short-term payment plan. In other words, you basically will owe, if you owe less than $100,000 in combined tax, penalties, and interest. Now, one thing I have to say that's very important here is that if you are a sole proprietor or independent contractor or a single member LLC, you need to apply for a payment plan as an individual. See, the whole thing is that some people believe, I'm a sole proprietor, or I am an independent contractor, I'm self-employed, or I'm a single member LLC, so I just need to apply for the business plan. No. The IRS still considers you a disregarded entity. In other words, you are filing taxes on your 1040. So you need to actually apply for a payment plan as an individual, okay? One thing you need to understand is that things are easier if you apply for the payment plan online, because setup fees may be higher if you apply for a payment plan by phone, mail, or in person. Okay, now one thing I need to say here is that the IRS expects you to make minimum monthly payments. Okay, in general, you can choose what you pay every month. That is, the IRS will ask what you can afford. However, if you are on a long-term payment plan, you must choose a payment amount that will pay off your debt within 72 months, 6 years. Step number 3, you need to understand the fees that actually go into an IRS payment plan. By the way, I just want to quickly remind you of today's topic. We're having a conversation about how to get approved for an IRS payment plan. The thing is that when we speak about IRS payment plan, the cost really varies. The cost of an IRS payment plan depends on which plan you choose, how you apply for the plan, and whether you qualify for a fee reduction. As I said before, please, if you can, just apply online. Do not do it over the phone, or do not do it in person. Do not do it via USPS mail. Okay, so let's talk about the options here. You basically have a couple of options. So if you pay now, there's no setup fee, and there are no future penalties or interest added. So you pay the full amount owed today directly from your checking or savings account, direct pay, or by check, money order, or debit or credit card. Everything is fine. Now there may be some fees that apply when paying by card. Then you have a short-term payment plan. This is 180 days or less, so there is no setup fee plus accrued interest and penalties rather until the balance is paid in full. So after applying for a short-term payment plan, you can actually pay the amount owed directly from your checking or savings account, or by check, money order, or debit or credit card. Now there are fees that apply when paying by card. Now we have a long-term payment plan. This is the installment agreement. You actually pay monthly. So you pay monthly through automatic withdrawals. So there is a $31 setup fee. So if you have a low income, the setup fee is waived, but obviously you have accrued penalties and interest that are added until the balance is paid in full. Okay, now if you pay each month non-direct debit, there is a $130 setup fee. For low income individuals, there is the fee is brought down to $43. Okay, they may be reimbursed if certain conditions are met. Obviously, there are still accrued penalties and interest until the balance is paid in full. So basically, one thing I want to say here is that it really depends on the kind of payment plan that you are actually you have chosen. Okay, now one thing I want to say here is that taxpayers can also apply for an extended short-term payment plan of up to 180 days by contacting the IRS by phone or mail. So there are still possibilities. Okay, the thing here is that just make sure that you contact the agency and then you actually start a conversation. Very important. I want to talk to you about a few other fee-related details that you need to be aware of, because the thing is that people believe, well, I have actually reached my agreement with the IRS, then I'm off the hook. No, there are certain conditions that you still need to follow. You need to follow through. First of all, make sure that you are punctual. So if you agree with the IRS on a certain amount on a certain date, do not actually miss the payments. Okay, now if let's say you're a low-income individual, you may qualify for certain, certain favors, quote-unquote favors. So you may qualify as a low-income applicant if your adjusted gross income is at or below 250% of the federal poverty line. Okay, so you can see if you qualify on IRS form 13844. If you are a low-income taxpayer, the IRS waives the user fee if you agree to let it make automatic withdrawals from your bank account for the payments. The thing is that ideally, the IRS wants to always have automatic withdrawals from your bank account. No direct debit card or credit card, no direct card or credit card payments. They want to have direct ACH withdrawals every month. Okay, now the thing is that if you qualify as a low-income taxpayer but are unable to make electronic debit payments, the IRS will reimburse you for the user's fee when you pay off your balance. Okay, If you make your payments with a debit or credit card, you will have to pay a processing fee. The charge for debit cards runs about $2 to $4 per payment. The charge for credit cards can be up to 2% of the payments. And the thing is, if you owe more than $25,000, you have to make your payments via automatic withdrawals from a bank account, so direct debits. So in either case, if you are a low-income applicant, if you allow the IRS to do things from the bank account, then things will be a lot cheaper for you and a lot quicker, because it's all about making sure that you have set up the right amount and payment to be taken out of your account every month, and that you have ensured that you have the necessary balance, the available cash balance to actually cover those payments. Very important. Step number 4, you need to know the information that you need to apply for an IRS individual payment plan. By the way, I want to quickly remind all viewers of today's topic. We are talking about IRS individual payment plan. Okay. One thing I need to say here is that you need to confirm your identity to apply, which means having the following information on hand. So you have the name exactly as it appears on your most recently filed tax return, a valid email address from your most recently filed tax return, your date of birth, your filing status, your social security number or individual tax ID number, the balance due amount, and your financial account number, mobile phone registered in your name, or an activation code received by mail. This might take 5 to 10 business days. Okay. Now, one thing I want to say here is that what do you need to apply for a payment plan? Well, starting November of 2021, the IRS usernames that were only used to access payment plans, online payment agreement, cannot be used to signing anymore. So what will happen here is that you will be prompted to create an account with ID Me and will need photo identification. The thing is that the IRS now favors ID Me because they think it has higher security standards, security protocols. Okay. And one thing I need to say here is that if you are applying for a direct debit payment plan, you will need your bank routing and account numbers. And if you recently filed your tax return or your return was examined but have not received the balance notice from the IRS, you will need the balance due shown on your return. So this is important. Now, one thing I want to tell you real quick. Here is a potential time saver for you. If you previously registered for an online IRS account, a tax transcript, or an identity protection PIN, you probably can log in with the same user ID and password. So this is really cool, and this really accelerates things big time. Alternatively, you can fill out IRS form 9465 and mail it to the IRS. So the thing here is that the IRS just wants to make sure they have the latest information about you on file, so that when you contact them or when they interact with you, they are sure they are interacting with the right individual. This is really important. Step number 5, you need to understand how to make changes to an IRS payment plan. You know, stuff happens. People go through stuff in life. You know, so basically, let's say you just agree with the IRS on you agreed with the IRS on the payment plan, and God forbid something happens to you. You lost your job, or your financial situation has deteriorated. I got it. Or let's just say that you actually things are doing better. Like you are really making a lot of cash right now, and you want to revise the prior payment plan. Totally possible, not a problem. Now the IRS offers an online tool that lets you change your monthly payment amount, change the monthly due date, sign up for automatic withdrawals, and reinstate a payment plan you have fallen behind on. However, that works only if you are not making payments through direct debits. So if you are on a plan where the payments are coming out of your bank account automatically, you have to contact the IRS directly. And there might be a reinstatement fee if your plan goes into default. Okay. So if you want to review or revise an existing plan, everything happens online. Okay. So you can view details in terms of reviewing. Let's talk about reviewing first. You can view details of your current payment plan, type of agreement, due dates, and amount you need to pay by logging into the online payment agreement tool on the IRS website. If you need help, please let us know. We'll certainly direct you to the right link. You can use the online payment agreement tool to make the following changes: change your monthly payment amount, change your monthly payment due date. You can convert an existing agreement to a direct debit agreement. You can change the bank routing and account number on a direct debit agreement. You can reinstate after default. And so this is for reviewing a payment plan. Now, what about revising an online payment plan? Again, you have to actually go to the same page. And on the first, so if you go to the section where you have the payment plan, on the first page, you can revise your current payment plan, okay? And so you can revise your current plan type, payment date, and amount. Then you have to submit changes. Now, if your new monthly payment amount does not meet the requirements, you'll be prompted to revise the payment amount. And if you are unable to make the monthly minimum required payment amounts, you will receive directions for completing a Form 9465 installment agreement request and Form 433F collection information statement. So to convert your current agreement to a direct debit agreement, or to make changes to the bank account associated with your existing direct debit agreement, you want to enter your bank routing and account number. And if your plan has lapsed through default and has been reinstated, you may incur a reinstatement fee. So this is really important to have all those details, let's say all those details clearly understood. Let me quickly talk to you about power of attorney for an individual. And this actually happens depending on your situation. This could happen that you will need a power of attorney, and or you want to be a power of attorney for a relative. Okay, so you actually have those two situations here. To apply as power of attorney for an individual, you need to log in with your IRS username or ID.me credentials, okay? And so for the individual you are representing, you will need taxpayer's social security number or individual taxpayer identification number, ITIN. You need the individual's information, but you also need your centralized authorization file number, so your CAF number. And you need a caller ID from the taxpayer's notice or POA's signature date on Form 2848. So the form is called 2848. And if the taxpayer's return was recently filed or examined, you may also need the taxpayer's balance due amount, secondary taxpayer's social security number or ITIN if applicable. You need to have the adjusted gross income for the most recent return on file, and the tax year examined if applicable. So those are really important. Now the thing is that you can always apply for an IRS payment yourself. You don't have to go through an attorney or a representative, whatever. No, you don't have to. You're not required to pay a third party to apply for a payment plan. There are a lot of scams out there, people actually trying to razzle dazzle you, telling you, hey, listen, I will set up a payment plan for you. I will set up an IRS payment plan for you. You don't have to pay anybody. You can do this yourself. Okay. If you do hire a tax relief company to help you settle your debt, you may have to give it power of attorney to apply for an IRS payment plan on your behalf. And proceed with caution and do your research, as the Federal Trade Commission warns on its website. The truth is that most taxpayers don't qualify for the programs these fraudsters hawk. Their companies don't settle the tax debt, and in many cases don't even send the necessary paperwork to the IRS requesting participation in the programs that were mentioned. Adding insult to injury, some of these companies don't provide refunds and leave people even further in debt. So please, proceed with extreme caution. Very important. Thank you so much for your attention. I really appreciate it. Into this conversation, I was just talking to you about IRS individual payment plans. We spoke about the plans. We defined the plans for you. Who is eligible for this kind of plan? What are the fees for the plan? What information do you need to apply? How can you make changes to an IRS payment plan, revise or review? And can you apply for yourself for an IRS payment plan? Thank you. God bless you. I'll see you next time. But until then, remember, stay marvelous.